Welcome to This Explainer. Today, we're unpacking a massive structural shift in the financial world. Look, if the past few years felt like, I don't know, slogging through thick mud, you are definitely not alone. We've been completely trapped in this highly restrictive economic environment. But mid-2026 is signaling a real transition out of that era. The business landscape is finally opening back up in ways we just haven't seen in a very long time. We're stepping into a completely new frontier of finance, and getting a handle on this transition is absolutely crucial for your strategic planning. So let's look at exactly what's changing. Okay, let's dive into our roadmap for today. First up, shifting 2026 interest rates. Then, AI and Fintech infrastructure. After that, we'll look at the pushback on cloud costs, and finally, the evolution of finance talent. All right, Section 1, shifting 2026 interest rates. The big picture. To really grasp where we are right now, we have to look back at the economic roller coaster we've all been strapped to. You remember 2021, right? That's when the steady climb began. Fast forward to 2024, and rates leveled out at a pretty punishing neighborhood of around 6%. That sustained peak fundamentally choked capital flow. It stalled aggressive growth strategies across, virtually every sector. Companies basically went into a defensive crouch. But now, in 2026, this anticipated drop is providing some real relief. It's doing way more than just lowering numbers on a screen. It's releasing the pressure valve. The entire gravitational pull of the market is shifting, taking us from strict capital rationing back to an environment where strategic growth is actually viable again. So why does this matter to you? Well, because this drop is actively reshaping the reality of lending, real estate, and consumer credit conditions. The mathematical modeling behind, say, funding a new startup or acquiring commercial real estate, or even extending everyday credit to consumers, it is entirely different today than it was just 24 months ago. For businesses, this means moving from that defensive capital preservation mindset back to a strategic, opportunistic one. If your financial models are still anchored to 2024 assumptions, honestly, they're already obsolete. Money is moving differently now, and market leaders are aggressively adapting to this freer flow of capital. And that brings us to Section 2, AI and Fintech infrastructure, the tech acceleration. With capital freeing up, businesses are actively seizing the moment. The sheer scale of this tech pivot is staggering. Nearly 2/3, 66% of finance leaders are deliberately building up deep technical capacity within their teams between 2025 and 2026. That is a massive structural departure. We're talking about a hard pivot away from legacy spreadsheets and manual data reconciliation towards architectures that actually support continuous real-time data flow. If you're in a finance department today, the vast majority of your peers are making tech-first infrastructure their core operating strategy. It's not some experimental IT side project anymore. It's the fundamental baseline you need just to stay competitive. Now, what's really interesting about this is that it's not just theoretical future casting. I want you to meet Billy. Billy is an AI agent who has been making a measurable impact in the finance function of a major Brazilian telecom company since 2024. Instead of just doing basic data entry, digital agents like Billy are now grinding through incredibly complex reconciliation workloads right alongside human teams. They're analyzing huge data sets, flagging anomalies, and drastically slashing financial closing times. We used to joke about having automated robots as coworkers, but, this is the operational reality of 2026. These agents are driving undeniable ROI and completely redefining what a lean finance team can actually pull off. Beyond specialized AI agents, wider fintech infrastructure is quietly becoming the daily plumbing of modern business. We're looking at things like digital payments, online lending, digital banking, robo-advice, and blockchain tools. These aren't just industry buzzwords. They are the rewired nervous system of your business. This infrastructure dictates exactly how quickly you get paid, how seamlessly you verify a customer's identity, and how you manage risk literally by the second. Embracing these tools, that's what separates agile, modern enterprises from the ones still bogged down in high-friction legacy transactions. Moving right along to Section 3, pushing back on cloud costs. This is the pragmatic pivot. Okay, let me set the scene for you here. For years, the mandate in tech and finance was simple: migrate absolutely everything to the cloud, at all costs. But today, CIOs and CFOs are getting hit with massive sticker shock from rising cloud bills and hidden fees. The honeymoon phase of infinite scalability is officially over. As companies scaled up their digital ops, they got hammered by hidden egress fees, servers that were over-provisioned and just sitting idle, and these complex, opaque pricing tiers that nobody really anticipated. The financial reality of unchecked cloud consumption is biting hard, and it's forcing a sudden, strict budgetary reckoning. And this brilliantly illustrates the shift. Look at the past. The strategy was going blindly all in on major cloud providers. Contrast that with 2026. Massive organizations, especially banks, are adopting a highly pragmatic hybrid approach. They are pulling back where it simply doesn't pay off. They're running strict cost-benefit analyses and actively moving specific workloads back on-premise because the cloud premium just isn't yielding a tangible ROI. It's a much more mature, disciplined pivot. Companies are finally prioritizing rigorous optimization and bottom-line efficiency over the shiny allure of blind innovation.
Finally, we arrive at Section 4, the evolution of finance talent, the human element.
We've talked about macroeconomics and tech, but how does this alter the human element? Well, the roles are expanding dramatically to govern all this new complexity. Take financial planning and analysis, or FP&A. Leaders are demanding sharper, highly dynamic forecasting that can instantly ingest those shifting interest rates and live AI data. Static, historical models just don't cut it anymore. Meanwhile, financial reporting has evolved way beyond just balancing the books. In 2026, it's driven by intense regulatory landscapes, meaning heavy ESG expectations and strict cybersecurity accountability. You can't just be a traditional accountant anymore. You have to be a hybrid operator, part data scientist, part compliance officer navigating green regulations, and part cyber auditor. As we wrap up this explainer, I want to leave you with one critical question to think about. Are you equipped with the forecasting and technical skills demanded by the 2026 landscape? The economic gravity has completely shifted. Capital flows differently. AI agents are literally embedded in our workflows. Cloud strategies demand real financial discipline, and legacy skill sets just won't survive. The 2026 landscape is already here. The only question is, are you ready to conquer it? Thanks for joining me for this explainer, and keep learning.